All right. Hello, everybody. Not sure anyone's actually here live, but welcome, welcome. If you're catching this on the replay, I'm trying something a little new today, so bear with me. But today, like I said, we are going to be going through in detail the July 2023 investor update for SIRC. So basically, let me go through the method real quick here. So what I did is this morning after it came out, I watched it, took a ton of notes, and what I figured we could do is I'll just run through it, each of the kind of main topics they talked about. They had a moderator, so he was asking questions. So I broke it down into that format. They jump around a little bit, so I'll try my best to keep it focused with some of the bigger topics. But that's the idea here. One thing I want to point out, I had the disclaimer flashing on the screen before. I'll bring it back up again. Another thing I wanted to bring up, I'm paraphrasing a lot of this update, podcast, whatever, from the company. So go back, watch it if you haven't yet, or at least familiarize yourself with it, because I'm not going to be using their exact words, right? So just keep that in mind, right? These are from my notes that I'm regurgitating here. So just want to point that out. I'll bring it up again later on in case anyone jumps in later, but that's the idea. So I'll take this down. So let me just bring up my notes here, and bear with me. It might be a little more dead time than normal because I'm going live and can't edit as I'm going. Let's see. So I guess as we start here, what were my general thoughts? I thought it was a great update, personally. I really liked it on the whole. I know they didn't give you or give us, like everything's fine, or like we're going to the moon type stuff, right? We didn't really get one of those, and that's not really what I was expecting. I just thought it was very professional. They were very focused on their objectives and goals and what they're doing with the company. They were very direct about things. They brought up things that I honestly didn't think they'd talk about. They came at them as head on as you can as a public company. They can't get into the super nitty gritty on things and say how they really feel. But I think my favorite thing, and I'll talk about this more later, is and I don't know if this is the right phrase for this, but there was no pie in the sky or no pie in the sky things for this update. What I mean by that is it felt like for the last year or so, every time there was a shareholder update or something along those lines, there was always oh, but if this thing happens, we're going to shoot to the moon. There's always this one thing that's just holding us back. And once that big thing happens, we're good. It's going to come soon. Don't worry. It was Arbiter. It's some of these big projects. It's the uplist to NASDAQ. You name it. I thought this was a very focused update on how to improve the business that they have already and make it work, which I think is much more important than hoping and praying that some external factor is going to save you, like Arbiter or an acquisition or something like that. So I thought it was really good. I wrote down here in my notes just good, sound, fundamental business improvement, which I really liked. I also, and we'll talk about this more. I thought they handled their thoughts about prior management pretty well. I think they were very careful about what they said, but I think they got the point across without needing to say a lot of things. We'll get to that more, but I'm glad they talked about it because I think it was kind of a weird, or not a weird thing, but an elephant in the room a little bit that I'm glad they addressed. And I will say the production quality, minus I know Brad was off site, but maybe they're cutting down travel cost and want to fly him to wherever. I think Troy's in Indy. And it looks like the moderator was on site too. So yeah, cutting down on flights, great for us shareholders. So I think he still did a good job being off site. So yeah, those are my kind of big picture thoughts here as we get started through my list here. If anyone joins, you have anything you want to pop in the chat, any questions, feel free. I'll try and jump back to the chat occasionally just to make sure I don't miss anything. But that's how I'll handle this. If not, I'm just going to go run right through my stuff. So first thing here, they led off with just a general message around shareholder communication. Really, all they said was that they want to do this. I think they said, I have written down once a month on the third Thursday of the month. So that's cool, right? We're going to get more of these. I think they're very helpful, obviously, or else I wouldn't be doing a video like this. So that was really all I think around there. They said the other thing they focused on too is just being more consistent with their communication and timeliness. It sounds like we'll be getting regular PR just as things arise, and it's not. I think they were kind of implying that it wasn't very consistent before, so we'll leave it at that. They went into Brad's background a bit, which I thought was cool. I didn't realize. I knew he was a West Pointer. I didn't realize he had so much experience in business and stuff. Must be getting pretty close to retirement. This is a tough nut to try and crack right before retirement. I don't know if I would do that. But power to him, right? Oh, and as we move on here through some of these other longer ones, I'm going to try and bring up the questions down below so you can jump through these if you want as you're watching a replay. So, next thing I talked about was leadership change and what are their general plans. So, it was kind of a theme, and they talked about this a bit later too. They sort of used this theme of like Dave Massey was the founder and sort of the creator, and he was sort of good in that stage or maybe more effective in that founding stage. But as they got bigger, more complex, they needed someone who could basically have a new skill set, right? I think they were dancing around the topic of trying to say that he just wasn't very effective at doing what the company needed right now. And really the focus now is just optimize value leading up to the Tribeca Energy deal, which is pretty self-explanatory. So I wasn't really expecting much different there. So up next, what is the new C-suite focused on? Question mark. What is the new C-suite focused on? So they basically just laid out a few things. Just flipping through my notes here. They mentioned how they complement each other well. Obviously, I would hope so as a C-suite. They want to bring on more independent board advisors, which is good. They mentioned Joe quite a few times from Tribeca, so clearly he's very involved in all of this. I know you guys on Discord are always messaging that guy and trying to get questions out of him. I have not talked to him before, but a lot of you guys have. A lot of this stuff is pretty self-explanatory of what they want to focus on. Improve revenue growth, good. Working through the best valuation possible with Tribeca, good. Working to understand how the families of companies complement each other, duh. Dealing with short-term debt. So this was a big one. And I watched this a couple times to make sure I got the number right. So dealing with short-term debt is one of their key focus items, and they said that's been cleaned up significantly to the tune of $15 million just since March, is what I wrote down. So one thing I wanted to do, and I have it open here, I'm not sure if this is what they were talking about, but they had talked about extinguishing a $14 million promissory note in a PR. So we haven't really seen a filing that totally talks about this. They bring it up as well in the last Q, but they say that it was like a subsequent event. So it wasn't WoW grants in here a lot. So we haven't actually seen like pen to paper on the actual, yeah, it's here. This is, I came out with a video on this about how this was confusing versus the PR, because this one says 30 million of common stock for 14 million note, whereas this PR says something differently. It says, I believe it says something like 4 million shares. So a little disjoint. I'll be curious to see when we get the next Q how this all looks, and also how their whole balance sheet looks with 15 million off the books. So that was good, but they'll talk about more on debt later. The other thing they talked about was I just lost my spot. Oh, improving service while lowering operating costs. Yeah, we'll talk about that more when they talk about the reduction in force, and then maximize value to Tribeca. Yeah, so all good stuff. I'm glad again, this was something I was happy to see. There wasn't a bunch of like pie in the sky, like crazy things like we need 15 acquisitions, or they never said that, but just things like that sound nice, but I think it's more important to fix up your own business. So next one I had here, revenue growth initiatives, which was pretty cool to listen to. One of the things they have really been focusing on, which sort of makes sense, is selling batteries, right? That's like the new thing. Everyone wants to have your own set of batteries with solar panels. I have batteries with my solar panels, which is nice. And they said last year, I think they mean 2022, they sold 50 batteries. The goal is 500. I don't know the pricing off the top of my head of what a solar battery is, but 50 does not sound like very much. 500 also doesn't really sound like that much in general, but again, I don't know exactly what their end price is. So, and they're trying to package that with EV charger sales / I have /Plemco here. So yeah, they're trying to diversify the business a little bit, not just pure panel play, but what can they add on? What can they, sell as packages, things like that. The balance section they talked about next, I was actually pretty happy with. Normally I'd get a little, what do you call it? Maybe a bit. I usually don't think balance is that important, just because it sounds like a pretty small part of the company, and sort of like the Troy baby child, whatever, his baby, for lack of a better word, pet project. But it sounds pretty interesting. They have a HELOC, home equity line of credit product they can sell to customers, which is cool. They're also rolling out, loan and lease products. This is one of those things that people were wondering how they can lend people money without having any money. And I think what he hinted at there, and I wrote this in my notes, but don't necessarily quote me on this, is they're doing it through alliance partners. So like they'll partner with like a bank or something. So they bring the bank customers, and then the bank gives them, or some financing institution or whatever will give them a home equity line of credit or just a loan against the solar panels, or lease financing, things like that. They're also doing business process outsourcing. That's sort of like the core of the business, I think. For contractors, they have over 1,000 contractor customers, they said, which is really cool. And they're expecting significant revenue growth in balance. I don't think we get a breakout of balances financials in there. I don't believe so. I don't know if it's supplemental. I'm not even going to speculate. But they say significant revenue growth. I don't know what the base is that they're talking about. Like significant revenue growth from $1 is a lot different than significant revenue growth from $10 million, if you know what I mean. So I think I'll reserve judgment a bit on this one, but it seemed really cool, and I'm glad that they're like trying new things to try and generate revenue. They're not just like hoping and praying, And then they mentioned again freeing up capital for large-scale projects. This is a common theme. I think we'll talk about it more later. But they mentioned how, as the business does better, capital opportunities will increase, which makes complete sense. I mean, you're a much more, what's the word? Desirable person to lend to if you make more money. So that makes sense, and that they want to move projects more quickly than they are now. That's pretty self-explanatory. So they talked about fundamentals of the existing businesses, which I will not spend too much time on because it was a pretty short section. But I mean, they said balance having its best year ever. They said in part due to weather conditions. So there must be, I think he meant poor weather conditions, which I didn't write down, but I think that's what he meant. And processing claims and things like that. A lot more admin around things breaking and whatever. They talk about improving the balance sheet, short-term debt, obviously. Makes complete sense. And they talk about how they had a different philosophy than the prior CEO about fundraising, which I have more to come on that in quotes or in brackets, so I will hold it there. But they want to retire high interest debt to fit the balance sheet. Obviously, I mean they have like some pretty crazy short-term debt on here, and I won't sit here and try and find all of it, but you can see it. Notes payable, here you go. I mean, this is where you're getting like stuff with like daily principal payments and or repayments and things like that. 25% interest rates, stuff like that. Yeah, this is the daily one, so no bueno. So yeah, totally agree. Clearing out debt is a good thing. Obviously, it depends on the terms, but it's important. So I will stop that one there. So this is, I think, this next one coming up is a big section, and I think it covers quite a lot. I'll mark it down like this. So short-term debt / balance sheet / funding and how that's being addressed is what I put. So if I'm flipping back over, they said short-term debt has been a challenge, and I'm obviously paraphrasing here, remember. They've been trying to restructure it, take out new debt to refinance, and then they've partnered with that Firebird Partners company to source better debt opportunities. This is one they talked about in a PR not too long ago. I don't remember if it's in here or where, but anyway, it's not important. So that was good to see. They're at least, I mean, they needed to do it one way or the other, so I really hope it's effective debt refinancing. Again, they talk about they've been trying to grow revenue, control cost, which is, they think, well, they said a lot of it is interest expense, which completely makes sense. I mean, if you look at their income statement, they are paying a hefty amount of debt or interest expense, right? So it completely eats up any gains, right? Losses on settlements, losses on loan modification, amortizing debt discounts. The list goes on, right? This is what's eroding a lot of their gains. So, how are they improving the business? How are they controlling costs, growing revenue, things like that? Again, they talk about this a lot, so I'll run through these quickly. Some of the things they said, like developing better KPIs. Everyone says that, by the way. That's pretty. That's like the management 101. Figuring out where they want to focus their attention. They had mentioned how they now they outsource roofing tear down, and all they do is install. Basically, playing to their strengths is the idea. They're lowering their geography footprint in terms of closing facilities. They've already closed one, they said. Great idea. I mean, as you lay off half the company in restructuring, you probably don't need as much physical space, which totally makes sense. They want to consolidate their San Diego locations. They vacated a lease that USA Solar was in, which is good. And then just generally eliminate costs that didn't add value to the business. Again, management 101 here, guys. This is what you do, right? Nothing in here is like groundbreaking, but it's also like what you do. It's like when you're hungry, you eat. It's sort of that. So so that's that one. Next one up, the workforce reduction. So I did want to spend a little more time on this just because it's, again, like a management 101 thing. But when we think about workforce reduction in the context of after acquisitions, I mean, they bought, what did they say, like 14 companies or something in the span of like 2 years or something like that. So it's very common that when you acquire a bunch of companies, they have roles that are being duplicated at the companies you already have. So like, let's say every company needs like if it's big enough, probably needs its own like accountant or something, or like someone doing bookkeeping, things like that, or maybe a few. But like if they get acquired by a company that already has people doing that, and it's easy to just roll it in, you don't need those people anymore. That's the idea. So they said they reduced headcount by 50% in the last 12 months, which means that they probably had just way too many people. I mean, 50% in 12 months is a lot of people. It was probably a lot of salespeople as well, and just getting everyone into the divisional structure. So what they mean by that is like they were individual companies, but a lot of them were doing a lot of the same things. So by making divisions, you kind of like get rid of you no longer work for like a company, you work in a division, which may have people coming in from all these different companies they acquired. And there's probably a lot of redundancy in having that many people. There are probably a lot of duplicate roles, things like that. So it totally makes sense that they're letting people go. From that perspective, they said they had payroll down from 15 million to 7.5, which is impressive. They definitely needed to do it. Hopefully it works out for them and we can start seeing positive cash flow. I don't know if we will, but at least they're trying is what I'll say. And I think the other point they brought, sorry, I was coughing. The other point they brought up was around like company culture and reduction in force. I don't know if this. Usually, when there's a big reduction in force like this and restructurings, generally morale is usually quite low within a company. They say it's good. I don't know if this is like the exception or something, but I sort of didn't believe it. But hey, what are you gonna do, right? I gotta take what they say for their word. So we'll leave it there on workforce. Sorry, I'm just making sure I don't miss a point here. Oh yes, and they talked about a corporate shared services model, which your boy Sam Aker is in a corporate shared services role. So that was always I got a good chuckle out of that when he was like, we centralize all of our corporate functions in one place. And I was like, oh. And then, and they all get services provided to the individual businesses. I was like, that's me. That's the company I work for, right? I'll never say who they are, but I do work for a company that has this exact same model with lots of divisions, and I provide services to all of them. So I'm sure they're not happy about it, that I'm providing them services, because we all know my intelligence level, but they just got to deal with it. So that is that. Oh, John Don is here, just checking the messages. You are my only message. I'll give you a... oh, no, can't do that. Sorry about that. All right, where was I? I'm still working out the kinks of OBS here, guys. Bear with me. Managing dilution. Okay. here is where I think we can spend some time. All right. They talk about dilution, and maybe we'll go back because I saw someone posted in the Discord today. The 3 billion shares authorized are now showing. So not a surprise. We already saw it on the Nevada Secretary of State website, but it's real now. I think it was real back then, but it's real for this. So they talk about dilution, and I think they gave a good answer about this, and I probably can't really say it much better than them, but I also liked, I don't know why he did this, but he specified at the beginning of the question about dilution that Dave Massey is no longer in the company and that he's just a shareholder, or he's no longer like in a active role or anything. He's not on the board. He's not the CEO. He's just a shareholder, right, with his Series B, right? Too many preferreds in the OTC. I can't keep them all straight. I thought that was kind of strange. I don't remember the entire context of why he brought that up originally, but the way they described their dilution strategy is they're using shares as a resource, and if used properly, it's not necessarily a bad thing, right? They can use it to raise cash. They can reinvest it in the company, and the end goal is to increase their valuation, and it can have a long-term gain for all shareholders, right? So, I mean, that's dilution, right? In a nutshell, you have to balance. I mean, there's really two ways dilution is ever good, and both of the boxes need to be checked, I think, for it to ever be good. You have to issue your shares as close to market price as possible at the time, and they have to be reinvested in such a way that the return makes it worth it to all shareholders. An example being if they diluted, I don't know, if they issued like a I don't know, 50 million shares or something, you'd be like kind of pissed that they did that. But they could also but if those 50 million shares meant that like all of their debt was forgiven, you'd probably be pretty happy, right? So dilution isn't always bad. It's more like what you do with it. So what I think they're hinting at, and what they didn't specifically address the 3 billion authorized share increase, but what they did do is tell us sort of their thoughts on dilution. Sorry, I was coughing again. Talking too much. And so they told us their thoughts on dilution, and then they talk about how it can be used, raise cash and be deployed. So for a company like them, which is not, I don't think they're really going to be acquiring anybody anytime soon, or having like mergers with another operating company. It seems like I mean, I might be wrong, but they're probably just going to ride out what they have up until Tribeca. The most obvious answer here is that it's probably debt conversions. So it'll be really important to see what the terms are on these conversions, or if they're issuing shares for cash and then paying off debt with the cash, like what price they were getting on their shares that they were issuing. So I think they were teeing us up for that without specifically saying it. But I mean, seeing an AS raise to 3 billion from 1.5 definitely tells me that there's probably some dilution in the future to come. So I will leave it like that. So this was a bit of a weird section, and I think we're sort of getting into the home stretch here. I have it written down. The question was about cash position, but then their cash position, but then it turned into the effect of the change of management and past management performance. So this, I didn't think this was going to turn into that juicy of a section, but then it kind of did. And before I get into it, I am just going to have a quick drink of water here. Before Tribeca, that makes sense. They then sort of veer off into saying that there were a lot of past practices that created the situation that they're in, which, is true. It was they kind of got dumped this situation from former leadership, right? They talked about again how Dave Massey they said was better suited for. And again, I'm paraphrasing. Actually, I'll show my disclaimer again, just so I be careful what you guys say here. But again, I'm paraphrasing here, right? Watch the video; they'll tell you exactly what they said. This is my notes and recollection. So they said that again, Dave Massey was the founder, and they said was better suited in those earlier stages. But as the company grew, it had higher aspirations. They needed a new management team that had a different skill set than he had. I won't say too much else on that, but you can probably fill in the blanks on what I feel like it shows that they were pretty I don't know. I'm not gonna speculate on how they felt, but the fact that they're even saying this on a a public podcast like this and explaining how there were gaps in his skills is, I think, telling enough on their thoughts. And I think they were, what's a good way to put this? It sounds like they thought it was a good idea he resigned. So they said he had a different management philosophy than them, right? They talked about Arbiter for a second. I won't. There's a whole section on it, so I'll jump past it for now. But they did say that financing and everything was a hot topic for shareholders. What I have written down in my notes here is that they said previous management's approach to generating capital was to spend capital. And sorry, 1 second. Man, I'm getting a coughing fit. They said that spend to generate capital, you have to spend capital. So if we think back to some previous decisions and initiatives, right? You had Arbiter, which was in a way spending capital, and not. Maybe they didn't think initially it was spending capital because it was just a $4.2 million loan, but when it doesn't get repaid or it's delinquent right now, it's a cost. I'm sure they'd love to have $4.2 million back. And they also said that the big priority for them, especially with the temporary, I don't know if temporary is the right word, the short-lived CEO CFO combo. They were focused so much on getting onto NASDAQ to raise funds via NASDAQ, which costs money and blah, 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 that the business probably wasn't quite ready for that. Nor could they afford it, really, it sounds like. And it didn't work. So their approach, again, they said, follow sound business decision-making via increasing revenues and lowering costs and raising operating profit through hard work, sound acquisitions, right? We've already talked about this, so I won't harp on it, but they're really, really focused on business improvement, which is cool. And something I really wanted to see. You can actually look back at my articles after, I think it was in April, after or right around when they released not the 10K, but I don't know if it was the annual report or something. They had the shareholder meeting at AVCO, which has not been talked about since, really. And I think I got a little worked up in my article about just them talking about like acquisitions, and they were still hoping Arbiter was coming through. This was the Dave Massey time still. And I think I got a little like angry about that, or like, like, are you serious? Like, you don't want to just like fix up the business? And, I think I was even annoyed that they were talking about like SPACs and things like that. And I've come around a little bit more to the SPAC idea, but, for now, I'm sorry, someone was calling me. I guess I just got kind of annoyed by them saying all that stuff. So hearing the next management team saying like basically everything that I wanted them to do is like music to my ears. Whether it works or not, I don't know. We don't know if it's going to work. I mean, the company still could not make it, but I think they're focused in the right direction, which is really good. So what else did I have here in my notes, just so I don't miss anything? Yeah, they mentioned that past management didn't really perform. I have in brackets here, but something I'm not going to say it because I think it's incorrect. And that there was an inconsistent message to employees. There was cultural confusion in the company that led to drain. They wanted to improve this. I think it was all part of the restructuring. In Dave's defense and all of that, restructuring that many people and that many divisions into one, or that many like separate companies into divisions, everything is very hard. Like, I'm not saying this is like a really easy thing to do. Where I work in my company, we've acquired companies before, and yes, they're a lot bigger than the companies they were acquiring, but it's so hard. Like, it can take years, right, to get it fully integrated and working in your cultural way. And it sounded like their culture wasn't very good in the first place, so I don't really blame them. I don't blame him too much for this part of it. It's difficult, but I'm glad that it sounds like they're in the home stretch here is what I'm getting. And how they're working in they're bringing in, Firebird or whatever it's called, and experts to clean up debt. So again, like what I was hearing from this section as well. I thought they handled talking about Dave and George and them pretty well. So, and then Brad chimed in really quickly. I think he just talked about how, he talked about interest rates, and I think this was coming back to the cash position thing. They have a really good point. They've very unfortunately ran out of cash, and didn't become operating cash flow positive quick enough before interest rates started to go up. So I've talked about this before, and I'll bring it up again. Anytime you have rates going up and you have a weakening economic environment, which, let's be honest, it probably is, you are going to have people do it's called flight to safety, and the most unsafe thing you can lend to, other than like something like a drug dealer or something. I'm not, there's a lot of risky businesses out there, but in terms of like public companies, lending to a penny stock on trading on the OTC Pinks is probably like about as high of risk as you can get. Not always, but just as a group. So it doesn't surprise me that they had a lot of funding opportunities fall apart, which is just too bad. I think they got fucked a little bit with luck on that one, to be totally honest. Would it have solved all their problems? Probably not, but I think it would have made things a little easier, and I think they wouldn't be like buried in the hole that they are right now with debt. Again, I don't know what it looks like now, but anyway. So yeah, he talks about that. He can say it better than me, but I'll stop on that one. So yeah, pretty juicy section. I would go back and re-listen to that one as well at some point. I think that's a good one. The next thing they had was on litigation, and I didn't really expect them to talk about it too much, because like rule number one of being sued or being in a lawsuit is you don't talk about it. Excuse me. They know that they're very confident in the business performance, Troy says, and but they know there's no shortage of litigation issues. They're trying to reduce all their litigation problems. I mean, I wouldn't expect them to come in and be like, we want some more lawsuits, right? I think they're saying the right things here. They said they don't know what all the issues were with all of the lawsuits, which I thought was probably the more. And they said they couldn't put their finger on why they were having so many lawsuit issues. So when I thought about that for a second, I was like, so the current management team is Brad, who is like a president of one of the divisions. So he's pretty high up, but not necessarily like C-suite, right? But then there was Troy and Wanda, who were, I think, Wanda was definitely CFO at some point. And I think, was Troy COO before? I don't even know if there's anybody in the chat who can answer me this, but I don't remember if Troy was COO before Dave or after. Anyway, it sounded like he was pretty tuned into everything. So the thing that I thought was sort of interesting was they said they didn't really know why there were so many litigation problems. And I'm connecting the dots here, and this is, I'm not saying this is what they're saying. I'm saying this as an opinion that a lot of these probably stemmed from Dave Massey's management style and personal, I don't know what the word is, initiatives maybe. Like, so many of their acquisitions ended up with litigation afterwards because of alleged, breaches of contract, right? And it sounded like it was not something that the three of them were really involved in too much. And so if they weren't really involved in it, it must have been the CEO. Again, my opinion here, I'm not really sure. So maybe they're just saying it was because of him, maybe. I don't know. I don't know. This is big time opinion time here, guys. But that was the one thing that was sort of nagging me in the back of my head going on litigation. Yeah, John, I agree. It would be nice to know what caused the problems. It's litigation though, so I can't. I try not to get too involved in it, but it sounded like management was trying to say that they were not the ones driving past litigation because they didn't even know how it started, they said, or really what caused it all, and that they're trying to get the slate wiped clean, right? So that's good in itself. I mean, I don't know what else you can really say other than that, but it made me confident that litigation should stop. Though I know it's a new management team, but they had been saying for like months and months and months that I think, what was the joke? They're trying to get out of the lawsuit business or something. And it seemed like every quarterly filing there was something new or some new litigation in there. So, yeah, it's definitely a red flag when you see that much litigation. I can't deny it. As a long shareholder, it's hard for me I try and stay as unbiased as possible when I talk about this, but yeah, it's hard for me to bring up red flags like that. So, anyway, I won't talk about litigation too much more. Let me just make sure I didn't miss anything here. Oh yeah, I had a note here as well, and I think it's worth talking about. It's only been like 2 months, I realized, since the new management team took over, and I've got it open. I can bring it up here. Oh, I'll get the date right. Yeah, May 19th was the day that the new CEO took over, Brad. No, Dave Massey was the CFO at the time. Interesting. Forgot about that. It's only been like 2 months, right? And litigation can take a long time. So I guess like litigation wise, I'm not expecting them to like have everything wrapped up in like a couple of weeks or whatever. This is going to take a little while, I think. And just in general, as a general comment, like it's only been 2 months, people. Like Dave was CEO actually until halfway through Q2, which is a bit weird to think about. I feel like it's been longer than that. Wow. These last 2 months have gone really slowly. But you got to give management some time. Like in ideal circumstances, I feel like management needs like a year, 6 months minimum to really start to plant their stake in their ground or whatever the phrase is. So give them some time. And by the way, I will make one aside here because I've I feel like I've been low-key throwing some shade on the guy, like Dave Massey, right? I've talked about this in past videos. Like, clearly it didn't work out with him. Like, I think I've talked about this in my Discord before. Some people say some pretty not nice things about him. Like, he should go to jail and weird things like that. Like, I'm trying to think of a good way to put this or what I said in my Discord channel, but yes, it didn't work out with him. And we have a new management team now, and there's a reason for that. He made mistakes, things like that. I don't think he was like malicious or like trying to like fuck everybody over or something. Or and I there's something I want to say, but I can't because I'm pretty sure it's going to come off wrong. But I don't think you should attribute malice to everything that people do. And the other thing I'll say is, this is the OTC we're talking about here. Like, I don't think we were we shouldn't expect Dave Massey to have been like Jamie fucking Dimon or something, or like Jeff Bezos. Like, it's clearly a different level of company and level of skills needed and level of expertise from management, to be totally honest. I mean, I've gotten to know some CEOs and management of OTC companies. I know my buddy Eric has Buffalo Fireside Chats. I mean, a lot of these CEOs are just like regular people. I know a lot of them are shitbags, but there's a good core of them that are just regular people trying to have a small business that is public, and it puts them in the public eye. And a ton of them fail, but a ton of small businesses fail too. I think what happened with Dave Massey is he just had a very popular stock that had a lot of hype at one point, and it just didn't execute. And I won't say failed, but it didn't work out on a big level, and a lot of people had a lot of money involved in it. That's my general thought on all of this. So yes, while I wish it would have worked out better with him, and I'm maybe a little annoyed at some of his mistakes and things he's done and said, I don't think he's a bad person, and I don't think he deserves a lot of the comments and the mean things people say about him in like on Twitter or Discord channels or whatever. So remember that he's just a person, people. So, oh yes, John. They must have was that a lot of pissed off customers? Yes, I'm sure they do have some pissed off customers. They, what do you call it? They did mention this. I'm changing gears completely here. I'm going back to the data here, so you don't hear me rant and ramble. But they talked about the customer is actually harder to sell to now. With higher interest rates, they talked about this in the cost of capital and all that discussion. They also said for customers it's tough. It's more expensive to finance solar and everything, and I mean it's like financing a car. It's pretty fucking expensive these days with rates like they are. But I'm not going to sit here and talk about macroeconomics for too long, or Dave Massey for too long. Oh, maybe I should hold that thought, because Arbiter. I'll give them credit. They brought up Arbiter. I kind of hoped they wouldn't, but I think when they brought it up, they made me, I don't know if happy is the right word, but satisfied with what they said. I didn't put quotes around this, but they essentially said that investing in Arbiter was not something they should have done. Yeah, it was finally, we can finally hear the company say that. Thank God. I think I almost wanted to scream into a pillow or something during the April shareholder update when they were still like, oh, we think Arbiter is going to happen, or, I was just talking to him last week, and I was like, oh my God. Like, so it was really nice to hear that the company has sort of shifted from, like, I'm not going to say the word pretending that it was going to happen, but maybe being pretty optimistic, or I don't know, believing that not very likely occurrence was going to happen, to being like basically this was a mistake, and it was nice to get some honesty out of the company. I know people don't like to admit when they're wrong, but this was a pretty big fuck up. One thing I did think that was interesting though, and I don't know if this has come out before, but they weren't the only company that lent them money. They said there were 7 companies. I think it was 7. But they said the total money lent to them was $7.2 million, and SIRC was 4.2, which I thought was interesting. For some reason, I thought in my head that it was just SIRC, but I guess other companies were doing this. I don't know if any other company has PR'd this before, or if any of these companies were even public, or or what the deal was. But I thought that was pretty interesting, actually, that it wasn't just us, so to speak. Yeah, basically they said they tried to create a lending institution, help create a lending institution offshore, and it didn't materialize. There was a regulatory and management change. I think we all know, just Google Darren Pastor. I won't say anything else about that. Just Google the name. You can find him in old PRs. I think that'll tell you everything you need to know. They said the investment was a poor decision and it is at risk. Yes, it is. It is still on the books as a loan receivable. No receivable with interest. That's the 96,950. None of this has been, well, as of Q1, none of this has been, they don't have an allowance for bad debt, which maybe they will need at some point, but that's up to them. So I'll watch for that. But in short, it sounded like they were trying to get their money back, which obviously they should try and do. I don't know if there's any money to be had. Again, I don't really have the info there. And they also said they were going to at least try and get the loan. But I think that sounded just sort of like a throw-in. Like, we want our money back, but I guess if they, by some miracle, actually give us a loan at those terms, we'd take it. So, anyway, there you go on Arbiter. Let's see here. When businesses expand, most times inefficiencies kill them. Not all the time. It depends. When you buy a bunch of companies that end up being like terrible, like SIRC did, that tends to happen. But if you have a good M&A strategy, it's not always bad. I'm an economist, right? And by trade, or not by trade, by education. And I don't know if you guys are any economics people out there, but there's an efficiency curve of deploying or of utilizing capital and output and everything. So in many cases, you could expand and it's more efficient for the business, but you can go too far or buy terrible businesses or bad capital or invest in bad assets and it'll kill you. Yeah. But not necessarily. Let me just wrap up here. I think we're at the home stretch. Callaway. Let me get rid of the. Someone's gonna need to remind me how to spell this. Is it 1L? I don't care. You guys know what I mean. Something like that. There's a pretty good update on Callaway. I know people are really focused on that one. It is pretty big. And it's a cool project. It basically just sounded like they were dealing with some they said political issues was the word. It sounded like they just couldn't clear through some red tape to get it started. What I did really, 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 really like to see was that they said, and did I write this down? They have the equipment already financed. So they have financing in place for the project. So what I was worried about is they didn't have any upfront capital to buy equipment to do it, but it sounds like it's already in place. It's just regulatory issues that are fucking them over, basically. And they said political. Maybe I'll call it political issues, which I was actually pretty happy to hear. I always thought at this point that it was both. They were getting delays from the government or whoever, and then they also didn't have any money. Because in my mind, really, and this is probably pretty favorable thinking here, but the company isn't that far. They're not that far off from being cash flow positive. They've done a lot of work on helping. If you look at the loss from operating activities, cash-wise, 2.7 million versus 21 million in revenue. It's negative 10% as a percent. That's not that bad in general. All it really takes is one very profitable big project like this, and you're cash flow positive. And it's a cascading effect, right? I'm going to sound like fucking Dave Ramsey right now, but it's a snowball effect. You start becoming cash flow positive, you pay off debt, you become even more cash flow positive, you can pay off more debt, and so on and so on and so on. So I thought the Callaway update was good. I liked it. I won't talk about too much more. They talked really quickly about EVs, which I'll just put EVs, which was good. It's one of those things with EVs where everyone is solar charging or EV charging stations, solar charging, Jesus Christ, EV charging stations are going to be this big thing because all these states are banning combustion engine vehicles and things like that. And it's cool because SIRC is very well positioned to meet this, but it's one of those things where if it's 2030 when it's going to be due, how many other companies have this idea? So I'm not banking totally on them just being they're going to outfit every house in California with an EV charger, or, something like that, or business or something, but it'll be good for them. But I'm not thinking this is going to be the company saver. In my opinion, their company saving thing are these big projects, right? Because this is a very you need a lot of relationships, and there's a lot of upfront work and expertise that they have, and they have done. It's just they need to execute on some of them. And that's going to be their in, I think, and sort of their edge. I think, again, all opinion. Hey, why don't I flash the disclaimer while I'm here? This is all my opinions, right? Go back and watch the video. But yeah, that's sort of what I think about EVs. Maybe I'm being a bit of a pessimist more than normal people, but that's where I'll leave it. All right, last topic. What there, and I'll speculate this so it's not a dangling participle, what management is most excited about? This is how they ended off. They just talked about a few things. They mentioned they want to be on the offense as they grow, which means they want to be proactive, not reactive, I think is what they're getting at. They're committed to Tribeca still, which, again, the more it's clear that they're not cash flow positive, the more I'm warming up to the Tribeca merger. But I've talked about that before. Bringing new vision to SIRC for the employees and the brand. They shouted out that Savage Media, which I think they did a good job with all this. But they recreated the brand, they said. They talked about ESG a lot. I'm not going to spend a ton of time on ESG. Without sounding like Boomer McGee here, I think ESG is just a buzzword for Wall Street than that being that important. But it's important in ways, but it's not as important as people think, I think. They said the people left after the reduction in force, the RIF, are high quality and motivated. Again, I probably maybe challenge that a little bit. Maybe they're an exception, but generally, when these big restructurings happen, it actually tends to be the opposite. The people that are left are generally not. All the good people generally leave because they're like, why would I want to work at a place that's going through all this turmoil? But I don't know. They know more than me. I'm just talking from generalities and my experience in going through these and seeing them happen at other companies. So. And they left off with, they're excited for Tribeca, and they'll be integral. They want to be an integral part of their uplist. Again, we don't need to talk about Tribeca too much, but that's that. I will end the specifics here from the presentation. Again, rewatch it. Throw up the disclaimer again, rewatch it. I paraphrased a lot of this. This is just from my notes. They said it more clearly. Don't take my words exactly as theirs. Okay. I promised some people I'd do Q&A because people asked me some questions. Let's see. Some people messaged me in Discord. Let's see. Where did these go? A lot of people keep talking about the valuation. I don't know what. It's too hard to tell. They could be any number of things. They're in negotiation with Tribeca now on how they want to value it. Who knows? It'll be. I'm not even going to say. I was going to say it's going to be more than market cap, but I won't even guarantee it. I would assume it's going to be more than the current market cap, but again, you never know. So Matrix asked me, give us your sense of when SIRC could get cash flow positive, and do you think the board of directors of SIRC and Tribeca have already struck a deal? As Troy and Brad looked a little relieved. I did not get that they looked relieved. I thought they looked normal. They may be taking a different approach this time versus the old management. Okay. So when do I think SIRC could get cash flow positive? I have no idea. It looks like they're trending in the right direction, but again, it depends on top line revenue as much as cost reduction, right? They can talk about reducing cost all they want, but if they don't increase top line, they're in trouble. I was hoping by the time they merge, they would be, but I don't know. I think we can, if we look at Q2 financials when they come out in August, and we look at subsequent events to see what kind of financing they've raised since June 30, I think that will be very telling. And the fact that they raised the AS by this much makes me think that they need to convert debt to shares because they cannot pay said debt, which would lead me to think that they are not cash flow positive. But so it'll give us an idea of how close they look, but we'll see. I don't think they've already struck a deal with Tribeca on evaluation. And what was the last part here? They're taking a different approach versus old management, underestimate and overperform actuals. Thoughts? Well, they definitely are taking a bit different approach than prior management, that's for sure. I think they are better about the whole under promise, over deliver. I mean, like, I worked in Big Four consulting for many years, and that was like, they were like, never put yourself in a position where you can't meet a deadline, like, ever, right? Even if you have to tell someone it's going to take a long time, like, you get it done early. Like, you don't tell, oh yeah, I'll get it done tomorrow, and then 2 weeks later, then that's a good way to get fired from a client or whatever. It's the same thing with them, right? They're working for shareholders, and they can't they can't communicate that way with shareholders. So I'm glad that they seem to be better about their communication and deadlines and everything. So hopefully that answered all your questions. Yeah, I agree, John. I mean, yeah, pretty self-explanatory, complete projects on budget and everything. Yeah, I mean, that's just good business, right? I thought someone else asked me something. I'm sorry if I missed someone's things. I did not write all these down beforehand. I'm just looking through my list. What did everyone post after the transcript? Oh, by the way, I don't know if he's going to listen to this, but I don't know how you actually say this person's name out loud. It's CRWS, Cruz. I always say Cruz in my head. You totally got a shout out when he was talking about Callaway and like pulling maps and looking at wells and all that. So I'm pretty sure he was talking about you, which I got a little chuckle out of that. I don't know if you're listening to this or if you're going to listen to this, but I'm pretty sure he was he was talking about you. Let's see. Is the Arbiter loan still alive? Technically it is. We'll see. Did I get any DMs about this? Oh, am I still holding SIRC stock? Yes, I am. I mentioned it before. It's in the video description. I do have a long position. I don't have that big of a position, though. Some of you guys have like a crazy amount of shares. I don't have that many shares. I'm not even going to bring it up right now. It's not that much, to be honest. My cost basis is less than $5,000. Easily less than $5,000. And do I think that Tribeca or SIRC will make it to the merger with Tribeca? I honestly think they will. I mean, no guarantees. This company has been in a lot of trouble since like November last year, October. And they keep finding a way. And I think their cash problems are getting better a little bit. I also think a lot of lenders, this is going to sound kind of messed up, but I think a lot of lenders have a lot of reason to let them live until Tribeca, because like if they're insolvent right now, basically. And if they go under, the lenders aren't going to get their money back, basically. So Tribeca will put cash into the company effectively. Tribeca will assume their debts and have a lot of cash from a supposed a planned IPO, not supposed, planned IPO. So yes, I think they'll make it. Personally, I think that was it on questions. I don't know how many people actually tuned into this. I'm not really tuned into this live. I don't really know how the stats work on here, how to read all this, but I think I'll end there. I don't know if there are any other questions. Drop me a DM or in the comments or something. I'm going to do a Q&A, a general Q&A, maybe this weekend, Monday maybe. I can do it live. I have a bunch of questions on other stocks. I won't talk about them today, but I think that is the plan. So if you listen this far and you have not subscribed yet, I think you need to subscribe. Trying to build the channel out here. Good way to support me. And thank you for listening. Let me know if you think of this format as well. This is a little different than my normal videos. I'm doing more longer form stuff because surprisingly enough, people actually listen longer than I thought they would. And I think people do like it. But let me know what you think. I can always break these up into clips later, but that is that is my request to you guys. Let me know what you think. So I will stop there. Thank you very much for watching, listening, and have a great evening.